All right, everybody. Thank you for joining. So, my name is Sigin Gold, and I decided to do a presentation regarding what affects the markets out there and how you can have an ultimate trading guide. So, I'll talk in these slides about different trading strategies and how you can become a better trader. I'll start from the very best beginning. Trading strategies. What are the factors that affect trading and how you can become better than 90% of the traders? And I say 90% of the traders because 90% of traders lose money in the stock market. So let's jump to slide number 2. What this presentation is not, this presentation will not teach you option strategy, which option strategy is best, but rather cut through the noise and get you up and running with the best out there. Understand the theory and mathematics behind all option strategies. We have designed to teach you the skills how to become an independent day trader. So there are thousands of trading strategies for options. There are naked call, covered call, butterfly, broken butterfly wing. There are iron butterfly, you name it. It exists out there. So how you can cut through the noise, avoid all these trading options trading strategies that you don't need to remember, you don't have the time to actually uh, actually create the strategy because the market it is very fast and very brutal, I would say. So all these kind of options, no matter what you option strategies, no matter what you adopt, they all are all based on one thing and one only, which is direction. So in case of learning thousands of option strategies, we are going to be focused only on finding out how you can predict the direction of where the index is going to be or the stock. So this is very important. Nobody teaches you this. We are going to scratch the top of it and see with yourself on how we can become better. So we cut through the noise, but what is the noise actually? The noise is knowing all strategies come down to knowing the direction of the trade. So why focus on learning what type of option strategy works for you when you can focus on mastering one, only one? Basically, even if you buy a simple call or if you sell a put, if the direction is up, it doesn't matter. You are going to make money on both strategies. So it is very important that you choose one strategy and you stick to it. And from my experience, it is very important that you choose that you are focused on one and master only one strategy, because it doesn't matter how many trading strategies you know. At the end of the day, if you are not making money, it does not matter. So we are going to focus only on one strategy. That is, you choose the strategy, I'll leave it to your hand, but we are going to choose and to find out how you are going to master the directional trade. So directional trading requires the trader to have a strong conviction about the market or the security's near-term direction while being aware of the risk if the price move in the opposite direction. So knowing the strategy, you basically are a master of all options trading strategy. I'll take an example only. I have put here a newspaper, which is the Wall Street Journal, Brooklyn Daily Eagle, actually, which says Wall Street in panic as stocks crash. So this is a newspaper that they have put here, and it basically tells that if you are mastering the direction, so it doesn't matter what option strategy you choose, master the direction, master the timing, master of the timing, you have gained two of the most important things. I would say to avoid YouTube gurus, because as you see, all these gurus have all year long warned us about a crash coming. Crash is gonna come this week, this month. in the next 3 months. No crash, whatever came in 2023. So when all these YouTube gurus that have put videos out there, why they are not making money, since they are so good at it, why they aren't making money through trading, but they are making money through selling a course. I'm not selling a course. So beat the market will scare you to finance thumbnails. This is very ironic because if the YouTube gurus would be so good, they would make money actually trading, and that's the end of it. So be patient. Once you have a strategy and once you know the direction of the trading and the timing, when I'll I'll teach you some indicators that will teach you how to time it. That's the end of it, and that's what you actually need to do. So you need to be patient. The stock market, as our old grandpa said here, Warren Buffett, the stock market is a device for transferring money from the impatient to the patient. One clear and simple investment edge that anyone can choose to take advantage of is patience. It doesn't require a vast bank of computers to crunching algorithms. You don't need AI. You don't need. It also depends on your trading strategy, I would say, because if we are talking about options trading, it is a very short-term trading, and it actually requires you to move fast with different directionals. But as you move through in time, you gain better experience in it, and you wait for the right opportunity to take the trade, and that is very important. So it doesn't matter if the stock is moving 10 points up, 10 points down. We wait for the perfect opportunity when our indicators are going to tell that we are going to choose it. So we wait for it. So in order not to be only all talk and no action, I'll listed here 3 leading trading indicators that will help you to master timing, levels, and how much you should trade. So for this part, I have listed here leading indicators, which is a measurable set of data that may help forecast future economic activity. Leading economic indicators can be used to predict changes in the economy before the economy begins to shift in a particular direction, because all other trading indicators are lagging indicators, and lagging indicators they tell us what has happened, not what is going to happen, while leading indicators tell us what is going to happen without happening yet. So these are the indicators that we want. I have taken here DeMark, which is the first trade indicators. I would highly recommend all 3 trade indicators, and I'll explain to you the importance of each trading indicators. DeMark for the general direction of an asset trend, but is often limited by the trailing nature of the underlying data. As a result, trends are typically confirmed well after key reversals have occurred. So DeMark is a counting indicator which tells you when you should sell based on the counting numbers. So the counting numbers are basically you count how many indicate levels, or how to say it, how many sets of candles, how many sets of candles you count them, and then there's a specific number which tells you when the trend is going to change, and is specifically used in options trading a lot. It is the perfect timing on when to time these changes. So I highly recommend it. The Camarilla pivot points, it is one of my favorite, not to say my best trading indicator. Camarilla pivot points is a math-based price action analysis tool that generates potential intraday support and resistance levels. So these levels are going to tell you where to buy, where to sell, and how to be very afraid when the price action touches these levels, because they are a leading indicator on where the price is going to be, and it is very important. Similar to classic pivot points, it uses previous day high low mid price to calculate the levels, and those levels are going to tell you the price of it. I'm going to explain the Camarilla pivot points in another session, but in this session I only want to touch them, to scratch the surface. And then the third trade indicator that I have listed is volume profile. Volume displays the total volume traded at each price level over a specific period of time. The volume profile may be based on visible range, which is a period of time that is currently visible on the chart. So we have the volume profile on how much. The Camarilla pivot points tell you the levels, and the mark tells you the timing. So I have here an example of these three indicators. The biggest one is the volume profile here, which shows the buying and selling strength of the stock at a certain time period. So it is said that these gaps that you see here in the Camarilla trading, we call them unfinished business, and the price action sooner or later is going to touch this is going to touch these gaps. So you sell at high and you buy at low where there's a volume. As you can see, the volume profile shows the biggest price action at the bottom, which is acting as a support. So if you buy the support, it is easily a winning trade. It is easily a winning trade. On the right top are the Camarilla pivot points. As you can see, the one with the red are the resistance level. The one with the black in the middle, it is the pivot point, which is the virgin pivot point. It is very important level. I will explain in another session. And the counting numbers, which are on the top at the bottom left, bottom right. And the counting numbers here are an indicator which shows the counting of the candles, and when it reaches usually the mark 9 candles, there's a reversal. Usually there is a reversal. The bigger the market cap of the stock, the higher the probability of this indicator being used. So this is the end of part 1. Please let me know in the comments your thoughts and ideas. I will explain in another session more in details the rest of the seminars, because I want everybody to be aware of the best trading indicators out there and how you can profit from them. Thank you and subscribe.